presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Good day, Money Masters and Treasure Hunters. Welcome to the May 8th terrific Thursday edition of The Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I'll be filling in for Tom this afternoon, and I am grateful for your presence here today. My outcome this evening, well, it's to teach you how to master the tools for trading. And that includes the tools of the mind, because when we master the tools of the mind, we become a strategist. Today, you'll hear me use terms like A to B equals CD, or I'll mention swing points. Maybe it'll be Gartley buy, Gartley sell patterns. Heck, I'll even talk about butterfly patterns. And each of these terms are what I call tactical patterns. They help us to project future price levels, and tactics are important. But tactics without strategy, that's a recipe for failure, and failure is not an option in my playbook. So no matter what it is you are trying to master in life, what I want you to do is I want you to think like a strategist, because strategists, they slay the tactician all day long. Now, the foundation of any strategy, it's to have a strong mind. So let's look at one of our tools. This is the tool I call, and it's my favorite tool, it's called Become an Ant. You see, ants live by a 4-part belief system, a success philosophy that each of us need to subscribe to and live by. Belief number 1, ants never quit. If an ant is headed somewhere and you try to stop it, you know this. It'll find another way. It'll climb over, it'll climb under, they'll climb around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you're supposed to go. Belief number 2, ants they think winter all summer long. Now, it's really important. It's an important perspective because summer does not last forever, and therefore, ants gather their winter food in the middle of summer. Belief number 3, ants think summer all winter long. This belief is even more important because during winter, the ants remind themselves, hey, winter won't last long, and on the first warm day, the ants are out. If it turns cold again, well, they dive back down in the earth, and they ready themselves for the next warm day. Yes, folks, they too can't wait to get out and enjoy summer. And finally, belief number 4. How much will an ant gather during the summer to prepare for winter? That's right, all they possibly can. This, my friends, this is the way to live. This is the system you need to adopt. Be an ant. Never give up. Always look ahead. Focus on what you want. Stay positive. And most importantly, do all you can do. You've got my commitment to do all that I can do for you for the next 60 minutes. Let's get things kicked off here. We had the Dow finish up 32 points, up 0.2%. It closed out at 16,550. and 97 pennies out there. The S&P down about 3 points, down $2.58, closed out at 1875.63. NASDAQ Composite, a little weak out here. It's been the lead dog. Well, it's been the second lead dog on the way down here. It was down 0.4% off 17 points, closed at 4,050. Russell 2,000. That's the weak link in the chain. Off 1 full percentage point, down 11 points, closing out at 1097 out here. New York Stock Exchange off 16 points today. It closed out at 10,610. It had net declining issues, 503 out there. That means it failed to turn the oscillators above zero. That says the bears still have control of the New York Stock Exchange. So where are we in the markets? Boy, if you were taking a look at intra-session, just like yesterday, we've had some fairly wild swings. In fact, inside the S&P 500, we went from a low today of 1870 all the way up to a high today of 1889. 1880, yeah. $18.89. How about that? We've had some pretty wide price moves out here. Now, what was really going on? What was today's session really all about? Really a light volume pullback. Just kind of a little bit of a pause out here from a candlestick standpoint. Not really much going on. Let's go switch over and take a look at what we did inside the SPY out here. If we take a look at the SPY doing volume today of 92 million shares. So yesterday we make a lower low. Now this is really important here. Let me step back. We'll draw this butterfly pattern. So there's one of those tactical terms, right? We'll draw a butterfly pattern in here in just a moment. The SPY, it's not so much a SPY. In the case of the SPY could very much be forming. It's going to do one of two things. Should do one of two things. It's either going to go test the highs out here from April the 4th. That price level is 189.70. The volume up there is 169 million. Again, today it was pushing up with 92 million, so pushing up with a little bit lighter volume out here. It's either going to overtake that level, and if it does that and it does it with volume, what it will do is it will go ahead and it will form an A to B equals C to the upside. The A point on this, and this is the lightning bolt pattern, this is where it will start at that swing point. That's a swing point is nothing more than where you see a major turn in the markets out here, a major shift in change in trend. And therefore, as the low is being made in the SPY on April the 11th, that low is 181.31. We'll start with that as our A point. Our B point is going to be the swing point that came in on April 24th. That high is 188.39. Goes ahead and pulls back, makes a low 2 trading sessions later. That was on April 28th. Gets down to a low of 184.96. So, if in fact the SPYs are able to take out the highs of April 4th, they have not tested it yet. That is where the SPYs want to head to. If they close above the level of 189.70, if they close above it, volume or not, what they will try to do is they'll try to complete that lightning bolt pattern. The 1-to-1, A to B equals C to D would take it to a price level of 192.06. So we've got two possible areas for us to be focused on. What would also happen at that 192.06 level is what we would see is we'd see a Fibonacci expansion. That would be an expansion of that same swing point out here. That's the swing point high from April 4th, down to the low that came in here on April the 11th. And if we take a look at that 1.272 expansion, that level would be about 191.93. So the target price, maybe it's a spike, maybe it's just simply a close over the swing point. The target area of what the SPYs are trying to do is get somewhere up in that 191.93, 190. Oh, I took out in that 190.193 type area out here. I can see my A to B equals CD tool kind of shifted there. Let's go take a look at the Qs out here. Let's go see, what has, in essence, led the market down. It is not as weak as the Russell 2000. Let's go take a look at the Qs, and this is really the pattern that I wanted to show you here and that is this, and that the Qs have this very unusual characteristic. And their characteristic, and you go back, you can take a look at all of the stock charts out here, what you'll see is that the Qs will make bottoms. They will make bottoms with high volume sessions out here. And that's really, when we take a look at what's transpired here, ever since the low that was put in, it was called the key reversal session. That was on April the 15th. Ever since that session was put in, that had volume, by the way, of 84 million shares. The next low that came in, the next retracement that came in inside the Qs, that was on April 28th. That low was made with 58 million shares. Heck, in the past, 58 million shares has made some pretty nice lows out here. Market is getting a little bit more volatile, let's say. So we're starting to see some volume pick up. Nonetheless, yesterday was also another high volume low. But what it was doing, you can see we've had 3 high volume lows. And yesterday's low, which was important, it did not take out the low of April the 28th out here. So what do we do today? Well, if you take a look, if you're watching this on Tiger TV, and I hope that you are, you can see a nice descending price channel out here. That descending price channel, price has been traveling in. The Qs were able to bust through that area. They first busted through on April the 24th, but they weren't able to stay out. Now, when you break out of a trend, the way that it works when you take a look at a stock chart out here, when you break a trend or you break a channel, typically price, what you want to see from either the bullish or the bearish side is you want to see price come back and test those levels. And when they come back and they test those levels, if they reject them and they stay out, it tells you that you're likely seeing a change in trend. Well, that was a failure that took place after the Qs broke through that channel line on April the 24th. Nonetheless, Qs broke through it on April the 30th. They have been traveling above, even though they've been trading a little bit lower. They just keep coming back and testing and testing and testing. Even today was a test of that price channel. Now, the volume, the pullback today, Light volume, 45 million shares. If yesterday was the beginning of a move down, you would have expected, number one, to see the lows be taken out. Number two, volume accelerate on the way down. We did not see that. What that sets up is the Qs still can make a move. How they're going to do it, I don't know. But they can still make a move up to the $90 level. Now, the cool thing about the $90 level is that the $90 level is going to be a test of the trend line that takes us all the way back into the June 24th, 2013 time period out there. So the Qs had broken through that price channel, that trend line out here. They have not gone back to test it. I suspect that is exactly what the Qs want to do out there. The IWM, that's a whole different story. But here's the deal. Yesterday, if we take a look at candlesticks inside the IWM, and we'll do this when we get back from the break, guess what it formed? A hammer candle. That hammer low was not taken out today. 877-927-6648. We'll be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. If you're not familiar with me, I'm the morning anchor, lead anchor in the morning from 9 to 11. So if you are looking to understand what the futures markets signal are telling us, if we're not on a radio station in your area, just go to the homepage at TFNN.com. You can tune in. You can listen to us on your mobile device using TFNN.mobi. You can watch us on Tiger TV. That way you can see all of our charts out here. Now, I mentioned that yesterday's action inside of the Russell 2000. It formed a hammer candle. Now, a hammer candle is a one-day reversal signal, potential one-day reversal signal that actually makes yesterday's low very important. That low is 1,093 and 28 cents out there. Now, we saw, when we take a look at the IWM a little bit later, we'll see that the pullback today on a little bit lighter volume, as long as that hammer candle low holds, that doesn't mean that price can't go test it and move through it. As long as it holds, that's an area where the bulls are trying to take some positions. Now, on my chart out here, I've got both a 50-day and a 200-day exponential moving average. The red line is the 50-day. The 200-day is the black little squiggly line. We did see price close below that 200-day exponential moving average today. We haven't seen that take place since November of 2012 out there. So the bulls need to get their act together. Now, folks, as we do each day at 20 past the hour, each Thursday at 20 past the hour, we spend time with our man, Andy Hecht. Now, Andy hosts the Commodities Hour each Tuesday and Thursday from 3 to 4 here at TFNN.com. Andy's been a commodities trader for more than 3 decades. He began his career at that commodities powerhouse, Philip Brothers. That became Solomon Brothers, which then went on to become Citigroup out there. It was owned by Citigroup. Andy, he was involved with some of the largest commodity trades back in the 90s. He's the author of an incredible book titled How to Make Money with Commodities. He's also the author of a fantastic weekly newsletter service called the Technomental Commodity Report, which you can test drive for free for 30 days. Just go to the homepage at TFNN.com and click on the newsletter link. It'll take you to the Technomental Commodity Report. Now let's go to our commodity king, Andy Hecht. Andy, how the heck are you doing today?
I'm good. How are you, Steve?
I am doing just great. So what are you seeing in the commodity market?
I wanted to start by bringing something up that I saw today, and as a chartist, I think you'll appreciate this. I have a chart up here of the June dollar index, which put in a key reversal pattern today on the daily chart after Mario Draghi made some comments about potentially cutting interest rates on the euro. And I think this has important ramifications for all the markets, including the commodity markets here. I've been looking for the dollar to bounce from support, and maybe we're going to get a pretty sharp bounce here based on this chart.
Yeah, it needs to for sure. And folks, if you are interested in understanding the U.S. dollar index itself, what you have to realize, it's a basket of currencies out there, and the euro. And the reason why Andy's focused on the euro is because it's the largest weighting structure inside the U.S. dollar index. It's something like about 54% or something.
Yeah. No, it's definitely up there. And the euro looks like it's come down from, it almost traded 140 on the highs today, and now we're kind of making new lows here in the aftermarket at 138.39. And I've been looking for a correction in this for a while, but this could have important ramifications for gold and silver prices and other commodity prices, certainly, as commodities are priced in dollars.
Yeah, so help folks understand, because what we've seen here over the course of the past couple of days at least, and correlations, they can become unhinged, and the question is when do they start doing the two-step tango together again? We've seen the U.S. dollar index move lower, and we haven't seen gold or silver do anything other than move slightly lower out there. Now, what are you seeing in the other commodities as the, with the U.S. dollar index over the past couple days, having broken through some key levels of support, maybe today it's found its footing out there. Have you seen that same correlation where we haven't seen much of a correlated move in the other commodities?
I really haven't seen the move, which is part of the reason that I've been looking for the dollar to bounce. The commodities have been trading more like the dollar's rallying here. Oil's been under some pressure since we traded 105 a few weeks ago. Copper is really not doing anything. It's trading in a range between $3 and $3.10. Gold has been dead in the water. Silver's in a coma. So basically, I have not seen with the dollar weakening any real action, no validation in the lower dollar. So that's why I'm particularly interested in this key reversal pattern today. And I think it might portend, some things certainly happening in the dollar here, but yes. Gold and silver, I've been saying on my show and I've been writing in my report that I believe that a big move is coming in gold and silver. But right now, it's a coin toss to me which way these things are going to go.
Yeah, okay. So it's a coin toss there. We don't like taking coin toss trades.
No, I'm staying out of those markets right now. Once I see them break down or break up, I'll try to hop on board. But right now there's very little going on in gold and silver.
Yeah, and so
the other thing that's interesting in commodities,
yes.
And tomorrow's a big day for commodities, Steve, because tomorrow the USDA will issue its monthly world grain reports. And these reports move the grain market. And as always, the USDA, especially this time of the year, Steve, they like to put a very positive spin. So they're going to talk about how many soybeans are being planted, how much corn is being planted, and they're going to assume that weather is going to be perfect. But we all know that Mother Nature can throw a monkey wrench into perfect planting. So whatever that report issues tomorrow, I expect the markets to move. And I wouldn't be surprised to see some selling pressure in soybeans and corn tomorrow. However, that might create an opportunity given the fact that we really don't know what weather is going to be this summer. But they love to paint the rosy picture, and these markets traditionally move big. And when I'm saying about the markets, the grain markets move big on the USDA monthly crop forecast. And wheat, which is one of the markets that's been in play, a lot of the winter wheat crop has been wiped out because of the frigid cold weathers. I'm particularly interested to see what they're going to say about the markets that have been showing strength, i.e. the wheat, the frozen concentrated orange juice. That's going to be very interesting in tomorrow's report. So I expect the markets to move big after that report is released tomorrow. I believe it's at noon Eastern Standard Time.
Yeah, so as you take a look at charts, would your take be that you're seeing the U.S. dollar index put in a key reversal day? If it actually the U.S. dollar index did nothing tomorrow and closed as it would on a weekly basis, it would have formed a hammer candle at another horizontal area of support out there. Are you seeing some chart patterns that would suggest that the commodity prices, the wheat price and so forth, would start to get in sync with a stronger dollar? And therefore, they would pull back. Is that what are you seeing that as
each one of them is independent. Look, I look at the charts and I pay close attention to the charts as to where to get in and where to get out. But I really look at the fundamentals of each individual market. So the fundamentals in wheat are pretty good here because, well, although there's a lot of wheat being planted around the world, that wheat is still growing. What we do know is that the winter crop has been lousy. 35% of it was basically wiped out. So I'm looking if there's a reaction in wheat tomorrow to the crop report to buy that dip in wheat. In corn and soybeans, also, if there's a big reaction, I'm going to look to step up to the plate and buy. I'm more bullish than bearish on grain prices, regardless of the way the dollar goes. But the dollar could provide some...
You bet. Thanks so much, Andy. We're going into hard break right here. Yep.
No problem.
Thanks. Okay.
Take care, Steve.
We'll be right back, folks. You bet.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. We had the Dow finish up 32 points. S&P was down 2.5. And in the pre-market out here, a couple of movers and shakers. Moving to the upside, Mercado Libre, MELI is the ticker symbol. They closed out at $83.26 right now. That is trading out at $88.75 out here. To the downside, though, we've got an equity. Ticker symbol is FUEL. The name of the company is Rocket Fuel Inc. Right now it looks like it might be Rocket Fuel Stink because it closed at $27.81. It's trading out right now at $19.93. That's a big percentage drop out here. Let's go out to Atlanta, Georgia. Let's go to Stan. Stan, thanks for calling. Thanks for holding. How are you doing on your Thursday afternoon?
Doing great. Thanks for taking my call.
No problem.
I want to ask you about Chemical and Mining Company of Chile, ticker symbol Sierra Queen Mary.
Yes.
Trading back at 08, 09 levels. It looks pretty inexpensive for what it is. Can you tell me about it?
Have you traded it before? Or
no, I just found it. I found it today. They're a major producer of lithium and agrochemicals.
Yeah, okay. Now, I was hoping that you were going to go ahead and try to pronounce the name of the equity because, as a co-host at the moment here, I'll probably blow it. I think it's Sociedad Químico. But it is a company in Chile. Ticker symbol, folks, is SQM. So let's take a look at it using a couple of different chart tools. Number one, if you're interested in this equity here, what I would do is I would wait for it to come back to the breakout level. So if you take a look at a daily chart out here, that's what I have up on my screen right now. On the trading session of February 26th, something had this thing break out to the upside with wide price spread and accelerated volume. And that says that the low of that session, which is right around the 26.55, and it's trading at $30.54, that would be your better reward to risk trade so long as it pulls back into that area with light volume. Now, no guarantee that it's going to pull back out here, but what this also really has is a stand. It's got a real huge supply line. And what I mean by a supply line is on the trading session, if you go back a little further on the left-hand side of a chart, what you'll see is the day of July 30th, 2013, people came out of this equity in droves. 6.1 million shares were traded on that day, and that sets up a little resistance area at the bottom of the prior day's candle, July 29th. And that price point is $37.49. And what's happening is everybody above that level, in essence, and there's a lot because you see this equity had traded at $65 just back in September of 2012 out here. Every time it gets back up to that level, either the sellers are there and they're ready to fire away, or folks are just saying, I want to get some of my money back. Even the folks here on the trading session of March the 5th are questioning, because this traded up on March the 5th as high as $36.25. So it's at $36.25. In essence, it's down 20% today from that high if you had bought up at that high level. So the better trade on this is really to wait for it to come back into, its sign of strength, into the area where it had broken out. So does that help you, or?
Yeah, it does. I thought I was seeing a pretty nice bull flag on the end of this month. So
are you looking at a monthly chart, or?
I'm actually looking at a weekly chart, and it's been way up. It's been up in the 60s, mid 60s, and it pulled back on reduction in revenue on an earnings announcement, and it's dropped about 50% from there. It's trading back at 08 levels, and I see a bull flag.
Let's do this. Let's put another system up on my screen. Let's take a look at the TAS signal box indicator system out here, and this is where we take a look at market profiles, which are really based on volume type profiles. You mentioned you were looking at a weekly chart, and if we take a look at the weekly chart out here, the weekly chart shows, hey, this thing is in a nice bullish mode. It's up above any kind of resistance level. This resistance level would be about $29.04. So if you're making your decision off of a weekly weekly chart, you'd love to see it come back and at least test that area. But if I go back over to the daily chart on this volume-based market analyzer out here, this says, hey, $29.64 would probably be your area where you could take a look at going long. But if we were to close below that, then the more likely outcome is that it would pull back into that breakout area. So just simply from a volume standpoint, I would say because this has such a huge supply line overhead, I would just be careful. The reason I say that, Stan, is I have traded this equity before. So,
okay.
So I'm just, to a certain extent, coming to you from a little bit of experience here, and the cool thing is that you did take a look at the weekly chart, and I would say it's very important for you to look at that week of August 2nd, 2013. Still high volume on the way down. What you'd really like to see, really from a momentum move, is you'd like to see that area of resistance all of a sudden become support. I would rather buy this equity at $37.50 after it breaks out above that than I would right here. However, I would also be interested in taking a look at it as it comes back and test the low of February 28th on light volume at about 26.53. Those are the two areas that I'd be looking at. Right now, you're kind of like in the middle of no man's land.
Yeah, I understand. Okay, well, thank you.
Hey, no problem. Thanks so much for listening. Thanks so much for calling. That was Stan in Atlanta, Georgia, and I'm not going to pronounce the name of it, but the ticker symbol we were looking at there was SQM. Let's go take a look at some of these equities here that are moving and grooving in the marketplace. Let's take a look at these ones that after earnings reports have been moving. Mercado Libre. So Mercado Libre, MELI is the ticker symbol. Let's go see what it is doing. Well, first it's trading up. Let's go see what it's going to trade into. So it closed at $83.26 out here. I got to put in the right ticker symbol. NELI will not pull up the actual stock chart. There we go. We got Mercado Libre. Boy, this thing has been in some real trouble here. So maybe you don't want to trust the pre-market activity out here. Today, closing out at 83.26. It's been in a substantial downtrend after. This used to be an IBD high flyer out here. Made a high at $145.99. That was back on October 22nd. Hey, that's a good day out there, October 22nd. October 22nd, 2013, makes a high of $145.99. It's traded $83 right now. What is that? That's not a 50% haircut, but it's probably about a 40% haircut. I did have and here's the problem with Mercado Libre, really, when you take a look at it, and we're using some volume analytics. Number one, what I would point you to is the volume, in essence, off the highs that took place on November the 6th. Gaps down with volume of 3.3 million shares. Keeps moving down. And what happens here, and this is really kind of a little bit of a tell out here, on the trading session of February 28th, don't know what took place on that day. We're in May, March, April. It's not an earnings day out here. But this thing gapped up with wide price spread and accelerated volume, 3.9 million shares. And just like Stan and I were taking a look at the SQM chart, and I was suggesting, hey, wait for this thing to pull back into its breakout area. You'd like to buy breakouts or sell breakdowns out here. And this thing pulled back into the breakout level and just never stopped, never gave you a reversal signal out here. And that's what you really want to see. You want to see something coming back into a breakout area with light volume. Then you like to see some type of bullish reversal signal. And it should not have done what it did, which is trade below that sign of strength. So even though today, right now, it's trading out at 88.75, 88.75 does not take us to the most recent swing point high, which would be May 1st, 2014. So it would not be unusual tomorrow for this thing to gap up or open up and, in fact, continue to trade lower. If we take a look at a weekly chart here for Mercado Libre, let's go ahead and clean up the chart out here. Let's go see what this might be trading back into. So on the weekly chart, this actually has broken a B point. It has not done it with volume, but that volume area in the area that I am looking at is the February 28th low, 87.88, that had 9.3 million shares, but that still acts as a resistance level. Looks like Mercado Libre, looks like, it probably is headed back towards the levels from August the 3rd, right around the $64 area. That's about another $20 lower or what have you. So be careful if you are in Mercado Libre and don't be taken by the pre-marketer. Now, fuel. Rocket Fuel Inc. This thing is truly getting hammered this morning, or this evening. It closed at 27.81. FUEL is the ticker symbol. Let's go see what this thing is trying to trade into. This does not look good, that's for sure. Oh my goodness, this is really bad news. What do I mean by that? This thing was an IPO. Came out on September 20th, 2013. Now, on that trading session, fuel went from a low of 54.51 to a high of 62.50. It did make a higher high back here on the trading session of January 23rd. Got up to 71.89. 71.89, folks. Today, right now, it's trading at $20. Do not step in front of rocket fuel, because it is crash and burn time for FUEL. We had the Dow finish up 32, S&P down 2.5. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom each day. Now, I kick things off each morning at TFNN, 9 to 11 a.m., and if we're not on a radio station in your area, you can always catch us by using that smartphone device of yours. If you go to, Safari, or if you're using an Apple or Android device, just go type in TFNN.mobi. That's one way that you can carry us around. We do live programming from 9 to 6. You can also see all of that programming stream live to you, so you can take a look at our charts. You go to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices on it. Click on that. You can actually see the show streaming live to you. Now, what I have on my screen here right now, I'm also author of a newsletter service called Mastering Probability. And I get that out to my subscribers every morning by about 8 a.m. That way, they've got an hour and a half to review it. It's got an abundance of information inside there to help them get set up for their trades. One of the tools that I include in there, and I've got it on my screen here right now, I've created something called the Rhodes Momentum Indicator System and Strategy. And what we're looking at here is we're taking a look at, just right now, this is just one of the tools, taking a look at each of the indexes, all the primary indexes, I should say, the index ETFs, the diamonds, the Qs, the SPYs, the IWM, the sectors inside the S&P 500. There's another couple of pages out here. I don't have them up right now. I take a look at the currency market. I take a look at the commodity market, and what I do is I take a look at it on a minimum of 3 time frames, monthly, weekly, and daily. Look, the reality is 70% of the folks that are listening in on the show right now, you're managing your retirement accounts. So you're more interested with regard to what's going on a monthly or a weekly basis. All the stuff that takes place on a daily basis, that's nothing more than, reading a good book or what have you. It's nothing more than noise out there. Sometimes it makes for a good story, sometimes it doesn't. But what you want to focus on is the intermediate time frames out here. And the real question is, hey, are we forming a market top? Now, what this shows you, what you're taking a look at, if, for example, you were indexed to the Dow, there's no market signal here, or let's say you were short the Dow, okay, even either one of those, there's no market signal here from a momentum standpoint, and that's really what this is. This is about truly understanding the trend, because the trend is your friend, unless you are absolutely on the other side of that trend here. And in the case of the Dow, it did not make a higher high today. The New York Stock Exchange did make a slightly higher high today. And you can see on all 3 time frames, whether it's the monthly, the weekly, or the daily, they are in strong bull mode. What we have going on here right now is we've got a fight between the NASDAQ Composite, Index 100, Russell 2000, and really the rest of the market out here when we take a look at the indexes. Now, a question I would pose for you, questions control your focus. Do you believe that markets all top on the same day? So in other words, if we really are putting in a significant high, do you believe that the markets all top on the same day? The answer to your question is no, they do not. In fact, if you go back and you take a look at, we'll just take a look at our 2 most recent significant market tops. You had the 2,000 highs out here. We had the Dow actually made a top on January 14th. The Russell didn't make its high, and the Composite didn't make its high until about 3 months later, March the 10th. The S&P 500 was 2 weeks after that, not until March 24th. The NDX 100 also was on March 24th, and that good old New York Stock Exchange, the wider swath of the market, the wider breadth of the market, it didn't actually make its high, its ultimate high, during that time period until September 1st of 2000. Fast forward to 2007, when we made our most recent high out here. The Russell 2000 was the first one to top, June 1st, 2007. Now, at this stage, we know about the Russell, absolutely under pressure. It made its high thus far March 4th. So in 2007, it was the first one to make a high. As we speak right now, it is the first one to make a high. The NDX 100 and the composite, they made their highs 2 days later on March the 6th. In 2007, it was the New York Stock Exchange, the Dow, and the S&P 500. They all made their session highs on October the 11th. The NDX and the composite, they did not make theirs until about 2 weeks later, October 31st, 2007. So what we could have occurring here, and that's what we're going to go take a look at some monthly charts here right now, because we've got the Russell's made its high on March 4th. The NASDAQ and composite at this stage, March the 6th. The Dow wants to make a higher high. It just wants to do it. It was so close today, didn't do it. It at least wants to do it. If it gets above that high, it's going to go ahead and make some type of expansion pattern. The same thing in the S&P 500. The New York Stock Exchange did make a slightly higher high today. But what we're going to do is I'm going to switch over and take a look at the monthly chart. And as I take a look at the monthly chart for the S&P 500, what you're going to see here, now what's associated with these highs, at least what was associated back in 2007, back in 2000 as they were making highs, what we saw an S&P 500 that was making a higher high, doing it on less relative strength out there. That's always bad news. It's only bad news when there's a reversal signal, and we don't have that here just yet. However, it won't take much for that to occur. And the reason that it won't take much to occur is because during the month of April, we really did not have much in a way of wide price spread between the body of the candle. The body of the candle for the S&P 500, that's truly the essence of price. It opened at 1873.96. It closed at 1883.95. During the month, we had a lot of moves up and down. But really, when you take a look at the real price action, there wasn't a whole lot. It only takes, in order to get a bearish reversal signal here in the month of May, we are in what's called the unfavorable seasonal cycle. It is a 6-month cycle. It begins on May 1st. That doesn't mean that the market makes a high on May 1st. It doesn't mean that. But what we do want to watch here is if in the month of May we see a close inside the S&P 500 below 1873.96, we will then have a reversal signal with a similar type of a topping pattern that formed in 2007 and formed in 2000. Is there any action that you need to take right now? Absolutely not. You don't need to. From a long-term standpoint, the trend is still to the upside inside the S&P 500. The trend is still to the upside inside of the NASDAQ. The trend is still to the upside inside of the Dow. If we take a look at the Dow, let me put the monthly chart on my screen out here. Now, what's interesting about the monthly chart here for the Dow is it actually has completed its consolidation breakout. Its expected move was in the 16,200 area out here. But what is going on inside of the Dow is it, too, could be forming what I refer to as a price relative strength divergent pattern. It's one of the Rhodes indicator systems that's included with regard to the charts that come out each morning for my newsletter service, Mastering Probability. All you need to do is go to the homepage of TFNN.com. You click on my name, Steve Rhodes. You can test drive that service, 30 days, unconditional money-back guarantee. It's something that you want to do, not just because of this information, because I make money for you. And that is really what it's all about. So, folks, my name is Steve Rhodes. I kick things off for TFNN each morning. Thanks so much for being here with me today. And Tom will be back with us tomorrow. It is Terrific Thursday. Have a great evening. I look forward to speaking to you sometime soon. Take care now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Good day, money masters and treasure hunters. Welcome to the May 8th terrific Thursday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I'll be filling in for Tom this afternoon, and I'm grateful for your presence here today. Now, my outcome this evening, my outcome during this next hour is to teach you how to master the tools for trading. That includes the tools of the mind, because when we master the tools of the mind, we become what I like to call a strategist. And today, you'll hear me use technical terms like A to B equals CD. That's our lightning bolt pattern. I'll mention swing points. In fact, we can't draw an A to B equals CD without a swing point. We'll talk about perhaps Gartley buy, Gartley sell patterns, maybe even a butterfly pattern here and there. These are all things I call tactical patterns. These would help us to project price levels, and tactics, they're important. They're critical. But tactics without strategy is an absolute recipe for failure, and failure is not an option in my playbook. So, no matter what it is you're trying to master in life, think like a strategist, because strategists, they will slay the tactician all day long. And now here's the key. Foundation for any strategy is really a strong mind. So let's go look at one of our tools to achieve that specific outcome, the tool I call Accelerate Your Learning Curve. Think about it. Some of you might have grandkids out there, kids, or maybe somebody might be expecting, and from birth up until about the time that we're 18, our learning curve is just simply dramatic, and our capacity to learn, simply staggering. We learn a tremendous amount very fast, and then things start to trail off. You know, if there's no more exams to take, I suppose, why read any more books? Imagine what would happen if we kept up an accelerated learning curve the rest of our life. Imagine what we would learn, the skills that we could develop, the capacities that we would have. So here's what I'm asking you to do. Tonight, you're perhaps driving home, you're getting ready to eat dinner, or you're going to go out for dinner. You're going to feed your body. What I want you to do is I want you to feed your mind. I want you to feed it with good ideas, wherever they can be found. Might be in books, might be in newsletter services, wherever they can be found. Make it your mission to learn one thing each day, then jot it down on a pad of paper. Use that digital memo pad of yours, and a year from now, guess what? You will be amazed at the newfound knowledge that you have. Yes, folks, accelerate your learning curve. Let's go check out these markets out here. We had the Dow finish up 32 points today. It closed out at 16,551. S&P down 2.5 points, closing out at 1875. NASDAQ Composite off 16 points, trading out and closing out at 4,051. Russell 2,000, the weak link in the chain, down 11 points, closed out at 1,097. Leading the charge, the upside here today, we had Green Mountain Coffee Roasters out here, up $12, up 13%. Copa Holdings, CPA, is the ticker symbol. That was up about 5%, up $6. Solar City, up 12% here today, up $6. AutoZone, up $6. Zillow, up 4%. Steris Corp, STE, I like that. Beginning of my name out there. Maybe we'll take a look at that stock chart. It was up 8.5%. Priceline all over the map. At one time, I think this morning it was down $30 or $40. Then it was up $19. Finished down $24. Leading the charge on the way down. Jazz Pharmaceuticals, a jazzy one, off about $4, down 2 7/10%. Gulfport Energy down 18%. Power Source, oh my goodness, or Power Secure, I guess is the name. Nothing secure about that. Nobody is inside that equity having a good time. Everybody in a losing position out there. Our call number is 877-927-6648. Feel free to give me a call, folks. Happy to take a look at your stock chart. Now, one development inside of the stock charts. If you listen to my show in the mornings, 9 o'clock, I kick things off for TFNN each morning at 9 o'clock. And if you've listened to my show, One of the things that I've shared with you, one of the things that I've taught, is that there's a currency pair that tracks the U.S. stock market better than anything else. In fact, I don't know if you hear this anyplace else. And it's called the Euro-Japanese Yen. It's not called the Euro-US dollar. It's not called the U.S. dollar-Japanese Yen. It's the currency pair of the Euro-Japanese dollar. That currency pair tracks our markets better than anything else. If you are watching us on Tiger TV, you actually see two different Gartley patterns out here. Those are the colored in areas. One is in kind of like a brightish pink. The other is in a light blue. It's a light blue one, the one that formed most recently that we want to be paying attention to. And that was a Gartley sell pattern that formed and completed on the trading session of March the 7th. What is a Gartley pattern, you ask? Well, a Gartley pattern is where you have an established trend. In this case here, what happened with the Euro-Japanese Yen, it made its high on December the 27th. Made a high on December 27th. We started to see a change in trend. Price moved down from a high of 145.67 down to a low of 136.22. Now, if at that stage you were of the belief that this was the beginning of a change in trend and you said, hey, where do I get in? Well, H.M. Gartley, in his book, and if you can find his book on the internet out here, what he identified, and it's a pattern, it's a beautiful pattern, he identified the best reward to risk trade is wait until you see this little lightning bolt pattern, this A to B equals CD that forms and completes. And that is at the stage where you want to consider going, and in this case here, you would be taking a short position in the Euro-Japanese. And I'm not suggesting that you do that, but because it is such a great guide as to what our markets are doing, what it did today is it broke through what is a bearish pattern out here. The bearish pattern is a rising wedge. And that's really the red diagonal lines that you see on my screen out here. I've been telling subscribers that this has been key for us to watch. It's a bearish pattern, and it went ahead today, and it went ahead and it resolved itself to the bearish side. Now, here's really the key. Because today's market, right, we saw the Dow moving higher. We saw the NYSE actually intercession make a higher high out here. We see the market pull back. It was doing it on light volume. If you take a look at the Qs, the SPYs, the IWM, the diamonds, the pullback today, well, not the diamonds because diamonds went ahead and moved higher, but it moved back on lighter volume. Here's the real key level. In essence, since the time period of March 6th, so we are now, 2 months into it, what the Euro-Japanese Yen has been doing is traveling into consolidation mode. And it looks like perhaps in overnight trading, we're going to see the bottom of that support level, which is priced at 140.38. We're going to see the bottom of that tested. If we see, and the euro really sold off pretty hard today after making a nice high, if we see this close below this level out here, you can probably forget about everything it is that I'm going to talk to you about today, which is the potential here for the S&P to make a higher high, maybe even make a butterfly pattern, because the markets ought to, and if they don't, if they go up higher and the Euro-Japanese Yen is headed lower out here, that sets up perhaps one of your best trading opportunities because the markets will go ahead and they will realign themselves with this liquidity currency pair. Now, does that mean the markets that the sky is falling in? Absolutely not. It just means that there's a critical pattern that we absolutely want to be paying attention to. That's why I'm spending the time with you here this morning. What you should do is tomorrow at 9 a.m., 9:06 to be exact, you should tune in to the radio show, the Trader's Edge show that I do and kicking off for TFNN. And, we may not be on a radio station near you, but you certainly can get us at tfnn.mobi. And, of course, you can go to the homepage of tfnn.com. Upper right-hand side, you'll see a button, 3 smartphones on that type devices. Click on that. You'll be able to actually see my charts streaming live to you. Now, let's go take a look at what went on in the markets. Let's go take a look at the ETF structures out. I need to do one thing first. We had a listener that sent an email from Martin in Canada. I don't know if he's a hockey player, but there's going to be a great game on here at 7:30. The Montreal Canadians and the Boston Bruins going to be key for Boston to win, but they are not on home ice today, so it's going to be a tough game 4 out here. But he wanted us to take a look at Amazon, and I think he's looking to get in on Amazon from a long position. And I sent back a quick email, and I said, hey, not so fast. I wouldn't be taking a look at buying Amazon, where I believe Amazon is going to release some information to us. Is at the price level. If you come back on a daily chart, that's what I have on my screen here for Amazon, and if you go back to the swing point low from November 21st, 2008, your next touch point out here is going to be the high, or the low, I should say, of July 23rd, 580. It is a beautiful trend line, and price right now is pulling back to that trend line. It may break that trend line. If it breaks that trend line, that has some really bearish connotations. Not that there's not some bearish connotations from the standpoint that this thing recently was up here the day of January 24th, 2014, out at a price level of 408.06, and it's at 288 right now. So that most certainly is not good news out here. But this thing broke a B point with volume, and A to B equals CD to the downside. We have not seen any bulls really step into this equity. It made a slightly lower low today, got down to 286.68, closed at 288.32. What I would do, Martin, what I would do for anybody that's taking a look at Amazon, I would wait for price to get down and test the bottom of this trend line out here. Price projection on that, it's probably around the 269-ish range out there. If that level holds, then perhaps you have a potential trade. But boy, the markets better be moving north, not south, when that takes place. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom. And as we do each Thursday at 20 past the hour, we spend time with our man Basil Chapman. Now, Basil has his own proprietary trading system called the Chapman Wave, which identifies the rhythm and soul of the market by counting peaks and troughs. Basil, being a native of Cape Town, South Africa, where there are a number of peaks and valleys, as well as a coastal road called Chapman's Peak Drive. How would you like to have a road named after you, as well as some mountainous ranges out there? Well, this road here is considered to be one of the most beautiful sightseeing attractions, with spectacular coastal mountain scenery featuring cliffs sinking into the Atlantic Ocean on one side and steep mountains on the other. Now, despite its beauty, this road is notoriously dangerous and consists of 114 sharp, meandering bends. Many years ago, a gigantic coastal cleanup campaign was launched, and the helicopter pulled 22 wrecks out of the water. This is adjacent to Chapman's Peak, and that's when a well-known story resurfaced. It's a tale of an Irish businessman who lost control of his Mercedes-Benz when driving along the road and plunged 100 meters down one of the cliffs. Now, miraculously, he survived in the accident. He actually crawled out of the wreckage with hardly a scratch on his body. Think about that. Now, Mercedes actually heard about the story. They were so impressed they decided to base an entire advertisement campaign around that story. Folks, if you want a safe car, I say drive a Mercedes. But if you want to learn how to safely navigate these markets, and the Chapman Wave is a tool you want to get familiar with. Basil Chapman, welcome to the show. How are you doing today?
I'm doing well, Steve. How are you? I love that story.
Oh, so do I. So do I. It's one of my favorite things I look forward to is if I get a chance to fill in for Tom, I'm always like, hey, is Basil on today? Because I love that story.
Well, if anyone wants to look at one of the most beautiful roads that goes right along the mountain, just going straight down. In fact, there's just a tiny little, not even a railing, just a couple of rocks as you're going along on the side of the road, which takes you straight down to the water.
Yes.
And one of the most beautiful oceans. So what you want to do is you want to be looking very carefully and
exactly.
Get your eyes back on the road.
Exactly.
So,
I was thinking about you a couple weeks ago. I ran across an article, maybe you saw it as well, and it was somebody that had taken the stock market charts, and they had overlaid some peaks, some mountainous peaks on them. I've got to go look that up. And it was so interesting how the stock market was actually following, and they didn't do any, supposedly they didn't do any touch-up work or anything to it. And it was just I said, hey, that looks like the Chapman Peak system out there.
So talking about about peaks, it's so fascinating. In the method that I have, what you do is you identify the lowest low bar, and that should just be visually very easy for most charts in the very beginning to get what I call a buy signal that goes to a buy mode, which means that you will look for 4 successively higher peaks. If you look at the Dow at 16,046 on the 14th of March, that's where a move started, and it went up to 16,631, which was the all-time high for the Dow on April the 4th. It comes down very quickly to the 11th of April, 16,015. Starts a new move, and for my subscribers to my opening call, is a very comprehensive analysis of the market every single day. The chart that I'm showing right now is actually for tomorrow. I've already got everything written up for this particular chart, and then I will add something else to it later on. But this gives you the perspective of what I'm looking at. So from that low bar on the 11th, at 16,015, it goes up to peak A, then it goes up to peak B. It cannot get to 16,631. It goes to 16,565.
Then there were those 2 days it was absolutely unchanged. The last time we had an exact 0% change, this was at 16,501.35. The last time we had 2 days consecutively was back in 24, that was Christmas Eve of 2010. So it doesn't happen very often. And for me, I used to do hand charting, so I used to look for these 0% changes. And the exact 0% change happened it was so infrequent. Well, it told me a story that becomes almost like they happen to be two doji candles. That's where you open and close at about the same level.
Right,
and in this case, that's exactly what you got here. And it says to me that for a little while now, this is going to be a fulcrum. And lo and behold, what happens, the Dow pulls back and goes down to on the 28th of April, it goes down to the 16,312 level. And then it goes up to leg C at 16,620, just 5-6 days ago. Still cannot make it. A bull market. This is a mega bull market. But for 3 months, 2.5 months, it has struggled to get to hold the 16,000. So it goes over 16,620, misses by 11 points the all-time high, pulls back again. And then what I did was I have drawn what I call a left side, right side price time match. So in my Tiger Technicians Hour, which I do every day, 11 o'clock till noon Eastern Time, people can call in, same number as they called in for you. Well, that is that shows that by tomorrow we should have tested, and what I'd say to subscribers, somewhere close to 16,631, exactly on that level or just above it. And lo and behold, today, what do? We go to 10,622. So that's 9 points off the all-time high. 10 points would have been an all-time high, and now we've got our leg D. Ironically enough, the Dow diamonds, have not gone to a D. Have not gone to a D. They've gone to an all-time high, but they went to a leg C. So when I put this all together, what it says to me is that at this particular point, this is the most difficult. The market is really struggling. You've had a tremendous decline in some of the big momentum stocks, certainly the biotech stocks. The New York Stock Exchange has gone to all-time highs, and that weekly chart is no other way I can count it in leg C. The premise of the Chapman wave is to go from an identifiable low bar, and you can do this in a 1-minute chart. You can do it in a monthly, multi-year monthly chart. Still means the same thing, a leg D, and that's where you've got to be careful. Well, that implies that with the diamonds, the Dow diamonds in leg C, and the New York Stock Exchange in leg C, that even though it's a very choppy period, and this can be demonstrated very nicely if you're looking at the 120-minute chart of the Dow, you'll see that we keep coming up to this level in these cup formations. Well, they're both cup and arch formations. Keep coming to resistance. So it's going to be very important. The Dow actually closed quite well today, considering what I'm not sure why it pulled back like it did suddenly intraday.
Right.
But whatever it is, a bear phase would have said that we would have closed more than double-digit down on the way it was pulling back.
So at this stage, any pullback that you're looking at, you're saying it wouldn't take place until sometime next week, until the diamonds catch up to the actual Dow chart itself.
That's my impression right now. Is just I haven't finished all my work for tomorrow, but at this particular point, I still see enough internal strength to sustain market support at about Dow. If we're losing the Dow, we could use the S&P, but I'll give you the Dow for now. The Dow 16,430 area. A sharper pullback, you've got to be very careful.
Perfect. Hey, Basil, thanks as always. Always great to speak to you. Folks, remember, Basil has got a great newsletter service. You can just click on his name on the homepage of TFNN.com. Does a show Monday through Friday from 11 to 12. Basil, have a great evening. Look forward to your show tomorrow.
Thank you very much. You too, Steve.
You bet.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom. Thanks so much for being here with me tonight. In the first hour, I don't believe I covered this in the second hour, so I'm going to go ahead and touch on it. And it's with regard to, the biggest question out here is the market topping? Now, I absolutely, are we at a market high? And I wish I had that crystal ball for you to tell you the answer to that. What I can do is we can read these charts here, and we can see what signals and pieces of information that they gave to us. We can look at prior topping patterns where they do show some type of top. How significant or not, is it going to be a top like in the 2007 time frame? Remember in 2007, now I'm a CPA. I've been a CPA for 30 some odd years. That's just one of my talents, I suppose, out there. So I can cut, paste, and assemble with the best of them out here. Now, remember, back as the markets were making their highs in 2007, it was a mortgage-backed security real estate deal out here, and it was really an accounting principle that ended up really causing so much of the problem. It's not that it was a bad accounting principle; it was a good accounting principle. It was one that was called mark to market. In fact, they had to finally let up the FASB, the Accounting Standards Board. They finally relinquished on that and said, okay, turn that spigot off, because what was happening is as prices, as real estate was falling in price, as people were defaulting on loans, in order to, you had to mark to market your investments out there. And so on a daily basis, what the problem is when things start moving south, there's just no stopping it. There was no stopping it. We don't really have that in place here as we speak right now. Whether or not it's a significant market top at all, that I'm not certain of. What I can tell you is that, many times people are underneath the misnomer that all markets are going to top on the same day, and that's not what happens. If you go back and look at you can go back as far as you want, but I just took out the most recent ones, the 2000 top, the 2007 highs out here, and potentially the one that we're in right now. If you take a look at 2007, Russell 2000 was the first one to make a market top. If there's anything in common with what we have here going right now, the Russell 2000, which is the week index, made a market high on March the 4th. In 2007, it was on June the 1st. The next one inside in 2007 to make their highs happened to be the New York Stock Exchange Dow and S&P 500 all on the same day, which was October 11th, 2007. 2014, well, the NASDAQ Composite, the NDX 100, they've both made a top 2 days later than the Russell 2000 on March the 6th out here. The Dow and S&P 500, we just were on with Basil. He is suggesting, based on the Chapman wave system, the way I take a look at things, I've also taken a look at the Dow making a higher high. Is it a slightly higher high? I show the potential for a butterfly expansion pattern. Nonetheless, and today we had the New York Stock Exchange. We didn't touch on it during that segment, but it made just a slightly higher high out here. So the point is really what I want to do is we want to take a look at some longer-term charts. Now, let's go take a look at. That's actually. I'm going to do two things. I did this during the last segment. We took a look at the S&P 500. We took a look at the Dow. So I'll touch on those briefly. Then we'll go take a look at the Russell 2000, because that's the one, even on a monthly chart, that is given the most significant market top. But as we take a look at the S&P 500, and the one thing that it does have in common, it's missing one key element, which is a reversal signal. And if you go back into the 2007 time frame, as the S&P was making its high, it was making a higher high. It was doing it with less relative strength. It is the most consistent pattern with regard to making highs and making lows out there that one should pay attention to. Why do I say that? Look, as I became a real student of the markets from a technical standpoint, I mentioned I'm a CPA. That means I used to be just a fundamental trader. Why? Because that was my bailiwick. I could read a 10K. I could read them. I could go and take a look at the management discussion analysis. I could pick apart their systems. I could at least fundamentally understand what was going on inside of a company. I would take a look at a stock chart, and it looked like a total foreign language to me. Maybe it does to you as well. What I then all of a sudden realized was just how fundamental the stock chart is, because it is the only thing that cleans out all of the news, and it really communicates to you what buyers and sellers are doing. And the reality is that what the shareholders are doing when it comes to buying and selling is giving you the most amount of information possible out here. Now, that's what led me to candlestick charting, because it wasn't enough just to be tactical to understand that A to B equals CD patterns, or the mere fact that you had a price relative strength divergent pattern, that was enough in it of itself to give you some. That was a tactic, and if you use that tactic and you started trading to the upside or the downside, you would get slaughtered. Strategists slaughter tacticians. It's where you need to be able to put together full strategy. Well, strategy is, hey, and that's where if a stock chart, if the buyers and sellers are the one that really are the most fundamental piece of information, and they're giving us the most information, it doesn't care what's going on with regard to the news. Well, then what do those candlesticks really tell us? That was the whole key. That was the trigger to then put everything together. So if you kind of follow my drift out here, a little bit of Stevie Son's evolution with regard to how it is that I trade, waiting for signals out here. Look, if I can save you a ton of money out here. When you place a trade, just use this one principle. When you're ready to place a trade, whatever the time frame it is that you're trading on, if it's a daily chart, if it's a weekly chart, if it's a 120-minute chart, when you think you've got the signal, do yourself this big, huge favor. Wait one more bar. Wait for a confirmation that price is now moving in the direction that you have just placed hedged a bet on, that you've put your money at risk on. Wait that one more bar. I promise you, what you will find, if you go back and you take a look at your trades, yes, you may pay a little bit more. But when you offset that against the trades that didn't go in your direction by waiting one more bar, you will find out that you will come ahead consistently out there. So let the market, you're willing to, this is about paying for information out here before you put your money at risk. You don't want to change, you always want to go ahead and trade in the direction of the trend, with the exception of when you're trying to catch a change in trend. And that's where you need to take a look at multiple time frames. Look, a daily chart is going to tell you when a trend is changing before a monthly chart is. Now, in the case of the S&P 500 on a monthly chart, it becomes very easy. We've got that same 2007 pattern that's out here. What we don't have is we don't have the signs from the bears, or the bulls and the bears, telling us that, in fact, we've got this reversal in place out here. And we're only early into the month. It becomes really easy for that to occur. All that needs to actually take place this month inside the S&P 500 is a close below 1873.96. Does it tell you how far prices are going to move down to? No. Where would be my estimate if we were to see? And we're in the 6-month unfavorable seasonal cycle. That is a 6-month period where the market typically pulls back as we come into summer. It doesn't mean May 1st. It does not mean May 1st out here. What it really means is actually the Dow, it makes its tops usually in June. So I would say we have a little bit of time to go. But let's not use averages out here. I don't like averages, because if you do anything average in life, you're going to get pretty lousy results out there. You want to be extraordinary. And that's what usually these patterns are all about. So if, in fact, the S&P were to pull back, I would say it probably pulls back into about the 1,700 level, the bottom of this rising price channel, this significant bull market that we are in. If that gets broken to the downside, that becomes a whole new picture out here. But I just don't see that taking place. Now, where is the real bearish-looking monthly chart out here? That happens to be in the Russell 2000. And it's got two competing patterns, quite frankly. Number one, the Russell 2000 has got an 11-year, 500-point consolidation range that it was traveling in. It broke out of that range convincingly back in January of 2013. That really says its price projection is that it wants to get up to 1350. Now, what this doesn't tell us is when does it want to get up to 1350. But what this also did, let's see if this had a price relative strength divergent pattern out here. Let me put the relative strength indicator out here. And it did create a price relative strength divergent pattern. The month of December 2013, the RSI reading was 77.68. The market makes a higher high 4 months later, March 31st, 2014, the relative strength reading was 73.48, forming a little doji candle. In Japanese terms, the way they take a look at a doji candle, and that's where you really have price open and close right very near the same thing. You don't even really have much of a body to take a look at from the standpoint of a candle. The Japanese have an expression when you see price closing lower, trading lower, it's like the leaves falling off the trees out here. Well, we did get a reversal signal. Not only did you get a bearish engulfing candle, you got on a monthly chart, what's referred to as a three-river evening star. What the Russell 2000 is doing right now, if you take a trend line off of the high from March of 2000, when it made a high, and all the way back to the high in 2007. That's this red diagonal line going across my screen. What is interesting, as we speak right now, is Russell 2000 is trying to come and actually test that level, an old line of diagonal resistance, and we're going to see if it becomes support. But if it does not act as support here, if there is a significant market turn that is taking place, the Russell 2000 is probably on its way down to about the 1020 to 1034-ish type level out there. 877-927. Back, folks.
Andy Heck's powerful weekly newsletter, the Technamental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technamental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technamental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes. Thanks so much for sticking with me. Tom will be back with us tomorrow. At least I believe he is. He's out of town today. And, in that last segment was just really, if we take a look at that 2007 top out there, you take a look at that mark-to-market accounting that we had, let alone all of the mortgages that were being made, without any verifiable income or support or ability to really pay those things back. And all based on the fact that, rising, that people would flip homes or what have you, and that the price would continue to move higher. That one, it was pretty easy to see. So what is it this time? It's the mere fact that the Fed, which is doing, $45 billion worth of mortgage-backed securities or bond buying or what have you, is that the thing that is going to be the culprit here? The mere fact that they're lighting up on the gas pedal there? I don't think so. Whatever bonds, whatever's on their balance sheet, they don't have to sell that. There's not going to be a fire sale. That they don't need to sell the long-term liabilities that are sitting on their books out here. They don't need that. So what is it? So are we in that 6-month seasonal unfavorable cycle, I should say? So a pullback at some point in time, sure. But is it the big one? It's not like in 2000, when you had all these tech companies that were out there that were, selling a story and not making any money. We don't have a lot of that. We got companies making all kinds of money out here. Maybe struggling to make some of the top line numbers there. But remember, they were making, a lot of these large companies were making their numbers because we did have a U.S. dollar that was getting weaker and weaker. And so from an export standpoint, they were able to generate more income. They don't like a strong dollar out there. We have had a strong dollar. Yes, the dollar index has been trashed here recently, but not when you compare it to where we were off of its real lows out here. So, but speaking of moves out here, kind of like the Der Stuka move of the day, it happens to be the euro out here. Now I've got the futures contract for the euro up on my screen. Der Stuka is one of those rides at Wet and Wild. If you've never been to it, it's one of those straight down rides. Of course, they may have a larger one now. It's one of those where you kind of get a wedgie no matter what it is when you are sliding down that slide. Now, if we take a look at the Der Stuka ride of the euro out here this morning. I don't know what time it was, 8:30 or so. It got up to a high. This is the futures contract that we're looking at. Got up to a high of 1.3993 out here. Now, this is the daily chart that we're looking at on our screen here. It's still actually in what we'll call a bullish mode. It has not given up the ghost here just yet. Yeah, what we're looking at is this is the e-Signal charting platform. e-Signal is the data provider, the data vendor that I have used in forever. This tool here that we're taking a look at, you may be familiar with the TAS Signal Box, maybe the video that's released at 8 o'clock each morning on at TFNN.com that John Logan puts together. Well, what's on this chart here are the market profiles. And the market profiles help us to identify logical areas, volume-based areas of support and resistance. Now, today on the daily chart, it made a new profile. So we're going to take a look at really the ones that have been in place, in essence, since about the April 8th time frame, so a little bit longer-term period. And the red line going across my screen, this is a real red line, is at the price point of 1.3819 or somewhere right around there. The new profile support level level really is at 1.3836. So long as the euro is able to hold this level, and I would use the 1.3816-ish range, even if it pushes down tomorrow and holds that level, the euro is still in a nice, strong, bullish mode. It has broken out of a very long-term, going back to 2008, descending trend line, price channel, however you look at it. The euro has broken out to the upside on the monthly, on the weekly, on the daily charts. And so as we take a look at a daily chart here, as long as it holds 138.16 or right around that level, it's still in a bullish mode. If I take a look at the weekly chart out here, the weekly chart shows one of the reasons why the euro on the futures contract ran into resistance today. It was trying to get up and over what's referred to as its resistance or unfair high level. That price, by the way, 1.3868. And that has failed to really act. The euro has struggled to get up over that level. In fact, since the new weekly market profile, which came into being back on March 17, 2014, the euro has not been able to take out that level. If it does take out that level here tomorrow, going into the end of the week, boy, that will be a very bullish signal. So that's what's going on inside of the euro. If we take a look at the Goldilocks and the silver here right now, we take a look for the similar type of support / resistance levels. Let's take a look at the daily chart as it populates on my screen. With regard to gold, very key from a bullish standpoint or bearish standpoint. Right now it's kind of like in mid-stroke. It's midstream. It's very important for gold to hold 1274.60. Gold slides below 1274.60, and I would say if we take a look at it, number one, you would be below the so-called unfair low profile. You'd be below support. What you would also be below is you'd be below the swing point from April 1st, 2014. And so if gold is unable to fend off that area, let me just show you the A to B equals CD pattern that it would likely form. That would be the message. And that's where the A point is the March 17th high. That price point happens to be 1393.20. The swing point that we're focused on, that is the low here from April Fool's Day, April 1st. That's your B point of the A to B equals CD down. We had a retracement here, about a dead cat bounce, 0.382 retracement. That's at the level, the high that was formed here on April the 14th, and that's out at a price level of 1330.80. If, in fact, gold on the daily chart here closes below 1274.60 tomorrow, hey, it could do it on Monday as well. This pattern would still be in play. We will likely see gold make a move down to 1216 post-haste. That means pronto. We take a look at silver out here and take a look at what silver's moves are or where its levels of support or resistance might be. Let's take a look at its daily chart out here. We'll let that populate. The daily chart, well, today it closed below that unfair low. On the weekly basis, it's been below that unfair low area. Today, not a good sign here for silver. The unfair low, the support level, $19.21. What you don't want to see tomorrow is you don't want to come in and see silver trading much. You want to see it closing, quite frankly. You want to see it trading above $19.21. If it doesn't, what does that mean? Well, number one, it likely means that we'll see silver move back and test the December 31st low. That's at $18.80. But I would say more likely silver would go ahead and test the June 28th low out here, and that's right at around the $18.31 level. So, folks, it's really been great to be with you. Tune in tomorrow, 9 o'clock, TFNN.mobi. So if you're on your way to work, wherever it is you might be driving to, tune in. We can take a look at the futures market together. We'll see where the euro Japanese yen is trading at. We know the key level here to be watching is that level of support, and that's down at the 140.38 level. If that's not broken, market can absolutely still bounce from here. Folks, have a terrific Thursday. Drive safely. Look forward to seeing you soon. Take care now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.